Jai Ganesh, happy morning. Today I will explain you the definition of accounting as prescribed by A.I.C.P.A, American Institute of Certified Public Accountant. Accounting is an art and a science of systematically recording, classifying, summarizing, analyzing, and interpreting the financial transactions and events of a business which can be monetarily measured. Now I will explain you each and every word in this definition, including its characteristics. And remember one thing, in this definition, your exhaustive syllabus of accounting is being covered, starting from journal till final accounts. We will go into the detail and I will explain you that in which word your which topic is covered. First of all, accounting is an art. So first characteristic is accounting is an art. Now why it is considered as an art? Just like in art there is a creativity, there is an innovation. Similarly in accounting also, in maintaining the books of accounts, there is innovation, there is creativity. In ancient times, books of accounts were written manually. Nowadays, it is through computer software, different tailor-made software or standard software are being developed. Like in India, most popular software is Tally ERP, Tally Prime or Udo. See, I am not doing publicity of any particular accounting software. This is for your general knowledge and information. Similarly, in US, there is MS Money, Microsoft Money, or QuickBooks, or say SAP, which is entire ERP system, not only accounting software, it is ERP system for mainly designed for manufacturing units. So this way, from time to time, innovation has taken place. So for example, initially at the time of say Mahabharat, Ramayana, or in our ancient India, books of accounts were maintained in that bounded red color books, in which Baniyas who were doing the business, they were maintaining a hard-bound books of accounts, right? And in that, left hand side was Jama, right hand side was Udhar, which was named as Deshinama system, as it was originally introduced in India. Then on the basis of the original Indian accounting principles, that is Deshinama system, Italian mathematician and a priest named Luca Pacioli in the year 1494, that is in the 15th century, invented double entry system. And as per the double entry system, left hand side is debit, right hand side is credit in books of accounts that we know, that we are following nowadays. Okay, that's why it is said to be art. Further part of the definition, accounting is an art and a science. Now why it is named as science? As you know, in science there are certain rules, certain principles, certain equations, certain experiments, or certain formulas. Similarly in accounting also there is accounting equation, then accounting principles, accounting concepts, accounting conventions, right? According to which the books of accounts are maintained. Accounting standards are also there. General accounting, GAAP, general accounting accepted accounting principles are there. Okay, IFRS is there, International Financial Reporting System. So accounting is said to be science. So accounting is an art and a science of systematically recording. Recording, it means accounting can never ever be oral. It is always in a recorded written form, which starts with your journal entry. Whenever any transaction takes place, it is recorded in books of journal entry. So accounting is an art and a science of systematically recording, then classifying, it means from journal, it is recorded in a ledger. so that if a businessman wants to know that during a particular month how much was the electricity bill expense, he can just refer the electricity bill account in ledger, and he can know that this much amount is the electricity bill for that particular month, and he has not to go through each and every journal entry which is maintained in a chronological sequence. So another part is classifying, which includes ledger. So recording part includes journal and all subsidiary books. Classifying part includes ledger. Recording, classifying, then summarizing. Summarizing, it means to sum up. It means to do the total, to do the aggregation. That part includes the balancing of ledger account. When the ledger accounts are prepared at the end of the month, at the end of the year, the closing balance at the end of the month or at the end of the year is found out. And on the basis of that, trial balance is prepared. So accounting is an art and a science of systematically recording, classifying, summarizing, and then comes analyzing and interpreting. Analyzing and interpreting, analysis and interpretation is done at the end of the year by preparing final accounts, that is trading account, profit and loss account, and balance sheet, which is also named as financial statements, on the basis of which owner of the business will come to know that as compared to previous year, this year how much is the profit earned and what are the assets and liabilities owned and owed by the business. So analysis is done, comparison is done, and on the basis of that interpretation is done. What interpretation is done? That as compared to previous year, this year the profit has increased or decreased by this much percentage. This particular expense has increased or decreased. Revenue or sales has either increased or decreased. So by comparing, interpretation can be done. So analyzing and interpreting the financial transactions and events. So what is recorded in books of accounts? Only and only financial or monetary transactions and events. So non-monetary, non-financial transactions, the transactions or events which are not related, connected to the business, are never ever recorded in the books of accounts. Now, what do we mean by financial or monetary transaction? The transactions which are related to the business. So for example, owner of the business, if it is a sole proprietorship fund, owner of the business has paid his personal expense from the personal fund. It will not be recorded in books of accounts. But for paying personal expenses, if he has withdrawn amount from the business, it will be recorded as a drawings. So transaction and event which affects the financial position of the business will be recorded in books of accounts. Now what do we mean by transactions? Transactions, it means to give and to take. So for example, if you buy a pen from stationery shop, you will get pen, and against that you will pay 100 rupees. So to give 100 rupees and to take pen. So transaction always involves give and take. It means always there are two persons involved in a transaction. So you can say that transaction is a bilateral, as two persons are involved. Transactions are entered into by willingness of both the parties. You know that many times bargaining takes place regarding the quality, regarding the price of the product. If buyer and seller both come on the common platform of price and quality, then only the transaction will occur. Otherwise, the transaction will not be entered into if any one of the party does not agree on the terms and conditions. So another part is transaction is by the willingness of both the parties. So you can say that transaction means to give and to take. Two persons are involved, so it is said to be bilateral, and transaction is entered into by willingness of both the parties. So financial transactions. Now what do we mean by events? Financial events are also recorded in books of accounts. Events means fire occurred in a godown and loss incurred. Due to lottery winning or prize winning, a person got the prize for a lottery, then lost by theft, or lost due to flood, or due to riots. These are all events. Event occur with a particular person, with a particular business, and he or she or that particular business is only affected by the business. An event, it means not always a loss. Maybe again, just like I narrated in my example, lottery winning, prize winning, or any event winning. Okay, so you can say that event is always unilateral. It occurs with a particular person, and he or she is affected by that person. But as it affects the financial position of the business, it is recorded in the books of accounts, financial events. So financial transactions and events which can be monetarily measured. It means the financial transactions and events which can be measured in terms of money are recorded in the books of accounts, which cannot be measured in terms of money are not recorded in books of accounts. Say for in India, books of accounts are maintained as per the Indian currency. So it will be recorded in Indian rupees. In foreign country, it will be recorded as per their particular currency, legal tender money prevailing in their country. So when you enter into a transaction, there is a quantity as well as the price. So whatever is the price or the cost or the rate you have paid for is recorded in the books of accounts. And that's why, see, success or failure of business depends on the quality of the or efficiency of the owner as well as the staff members, which cannot be monetarily measured. It is not so that the success of the business depends only on the finance, on the funds and all the transactions. It is the man, machine and money. All the three factors are responsible for the success or failure of the business. But honesty, sincerity, dedication, devotion of employees or the owner cannot be monetarily measured. And that's why it is not recorded in the books of accounts, even though the financial results are affected by it, maybe positively or maybe negatively. But all these non-monetary factors, non-financial factors, or the factors which cannot be monetarily measured are never ever recorded in the books of accounts. So the financial transactions and events which can be monetarily measured. So this was the exhaustive definition of accounting given by A.I.C.P.A, American Institute of Certified Public Accountant. Once again, I am repeating the definition for your summary. Accounting is an art and a science of systematically recording, classifying, summarizing, analyzing and interpreting the financial transactions and events of a business which can be monetarily measured. Thank you very much. Have a nice day.